The days debtors ratio is simply debtors over sales. Now debtors, or accounts receivable, is the asset we've been discussing, which is a current asset on the balance sheet. Sales is the sales revenue contained within the income statement. If you take the debtors divided by sales and multiply by 365, you get a number of days, and the number of days is an indication or an average number of days between you selling your goods or services and you collecting the cash from your customers. How long does it take on average between selling a good or service and then collecting the cash? Now I think it's almost obvious to say that you'd like this number to be as short as possible, because as we said earlier, you want to get that cash in your pocket as quickly as you can. So we're trying to measure how long it's taking, and we can do this measurement over time and compare it to previous years. We can compare it to a budget. We can compare it to your competitors and see what they're doing, but we're trying to work out how long it's taking. Now at the bottom of that slide I've done a little example using the Shouben Liu financial statements, and those figures, the debtors, the sales, come from those financial statements, the debtors from the balance sheet, the sales from the income statement. And when we put those figures in the ratio, you can see that the answer is 48 days, which means this company takes on average 48 days to collect their cash. Now the question you have to ask yourself is, firstly, do you understand this ratio and know this ratio for a business? And secondly, are you happy with the result? Is there anything in that result which makes you need to maybe try harder or do better at collecting these cash? Clearly, if that number becomes greater, then that means you're collecting your cash slower, and therefore you have greater risk of either having more doubtful debts, you won't collect the cash, or by the time the cash comes in, it'll be worth less than what it would have been given the fact that money is going to lose value over time.